I'm Russell Poynton from Edison Group. Today, it's great to have back with us Josef Mastragostino, who is the Chief Investor Relations Officer of Tinexta, to talk about Tinexta's interim results. Good morning, Josef.
Hi, Russell. Thanks for being here, and thank you very much for having me.
Okay. So, Josef, I think the key takeaways from the interim results were the strong revenue growth enjoyed by both cybersecurity and digital trust. Whereas business information demonstrated its typical seasonality. So could you just start off by talking about cybersecurity in terms of what's driving that growth? And because the company had relatively slow performance after the acquisitions and the integration.
Absolutely. Thank you for the question. So, starting from cybersecurity, we're very glad to show that the performance of cybersecurity is continuing to show its strong momentum, right? We are now 3 quarters in a row performing extremely well. If I look at the first stage results of cybersecurity, and you can see that on the slide, we basically registered a growth in terms of revenue close to 16% versus the prior year on a 1H basis. In terms of EBITDA, the growth is even more significant, and we're growing 59% in terms of EBITDA adjusted versus the prior year. And this is also the result of a very, I would say, strong and fully executed strategy, which already started in the second half of last year. We decided to invest strongly on key resources, in particular in the sales department, and now the division is actually performing extremely well. We expect to grow this business very strongly throughout the fiscal year 23, and we, in fact, have an overall guidance in terms of EBITDA that is growing anywhere between 30, 35, or even 40% versus the prior year. We're, I would say, in a trajectory of growth. We now have 2 more quarters for the year, and we will see how those play. But just as a reminder, it is important to highlight that we already are showing the strength of this business. We were able to, during the first age, to actually close important deals. We finally introduced one of our proprietary products, which is called Defensio. So we have very good expectations for the remaining part of the year, as well as for the next quarters to come. I would, at the same time, take a chance to look at also how, on the same slide, you see how digital trust is actually performing. Digital trust is probably the division among 3 that is most constant throughout its quarters, right? And even in the second quarter, and therefore in the first stage, we're showing consistent growth with EBITDA growing on a 1H basis versus prior year close to 16%, and revenue growing around 12%. As you might recall, this is one of the divisions that has a very strong operating leverage.
And moving on to business innovation, there is some seasonality in that business, and there were some phasing issues in the first half. So could you talk about what happened and why you're so confident that the business will show stronger growth later in the year?
Yeah, absolutely. I mean, this is important to highlight that, business innovation, now that we also have sold one of the divisions, let's all recall that credit information management has been sold, and definitely if we can talk about the seasonality of the quarters, and I'm referring to the next slide, it is very important for the group. I mean, business innovation is the division that performs the most in the fourth quarter, and we want the market to know this. It is very crystal clear that the biggest contribution to EBITDA is set to come in the fourth quarter of the year. In fact, on this slide, I wanted to show, on a factual base, how the group EBITDA is actually moving on a quarter-by-quarter basis, and what is its relative weight to the total EBITDA. And you can see here that in 2023, 2022, 2021, going back 2 years, the relative weight of the EBITDA produced and registered in both the second quarter and the first quarter of this year is absolutely in line with that of the last 2 quarters. This is to say that business innovation is expected to grow mostly in the latter part of the year, and more precisely in the second part of the third quarter and all of the fourth quarter.
Okay, that's great. Thank you, Josef. So you've talked about the divisional results. Could you just give perhaps a wider overview of the first half results, which include that there was a lot of M&A for Tinexta in the first half, and then talk about your outlook for the rest of the year?
Okay, so well, in terms of, first of all, let's talk about, we generated a lot of cash. This is a cash flow story. If we refer to the next slide, you're able to see how, notwithstanding the extremely positive results of the first quarter of 22, we were able to increase our adjusted free cash flow of continuing operations even more this year. And we reached around more than 29 million euros. And this is the result of our model, our business model, that is able to generate significant amount of cash. So 29 million plus in the first stage is a very comforting number. We were able to reduce significantly also our net financial position, as you can see on the same slide. And our total balance sheet position, I would think, is extremely clean, secure, and ready to generate and to perform and execute any further M&A. In fact, for that matter, I would like to underline the fact that our performance in this year has been mostly organic, right? So the performance has been exactly, it's fully comparable to that of the prior year. We are growing more versus the same perimeter of last year, which is actually a very positive, I would say, piece of information for investors, because that means that notwithstanding the current macroeconomic environment, notwithstanding the uncertainty in the market, our business model is actually proving to be, resilient and definitely recession-proof. That is also a result of the fact that businesses in which we operate are businesses that are obviously extremely highly demanded, and therefore we're able to grow. M&A, on top of that, is an important element of the story. The fact that we have a very strong balance sheet, a very strong cash position, a very strong cash generation brings us in a very, I would say, enviable position when it comes down to M&A. M&A obviously will require the time that it requires. There's so much that I can say. We are definitely looking at important targets in the international markets, because the international markets are the ones that are mostly important. And we are definitely looking at targets in the digital trust area as well as the business information. And we'll see how that plays out, but would like to convey to the market that we're definitely in a good position to execute and carry forward in this direction. In terms of, and I would take advantage also of saying that during the first 8 results, we were very confident in confirming our guidance. In fact, in the next slide, we are able to show to the market what is our overall expectations for 2023. We expect the top line, therefore revenue, to grow anywhere between 11 and 15%, with an EBITDA adjusted to grow anywhere between 8 and 12%. The reason why EBITDA, and I want to tackle this directly, is growing less than the top line is because that the overall weight of the cybersecurity market that has an embedded, an implied lower EBITDA is higher than the other divisions. So it's purely a mathematical effect here. Net financial position and EBITDA over EBITDA just is expected at 0.2, 0.3 times. So we're definitely in a very strong cash position. And just to remind everyone, we expect to pay out a dividend on fiscal year 23 results of at least 30% of net profit. All of this is including an inflation assumption around 6%.
Joseph, thank you. That was a very thorough summary of your first half results and the outlook for the rest of the year. So we'll look forward to seeing the future results. Many thanks for your time.
Thank you, Russell, and have a good day.